The Midcontinent Independent System Operator, or MISO, is the nation's largest power market by geographic footprint, including portions of at least 15 US states and even extending its reliability footprint into the Canadian province of Manitoba. Over the last decade, MISO has undergone one of the more rapid transitions towards a decarbonized generation stack, driven mostly by a vast expansion of wind power across the northern and central parts of the footprint. While state level renewable portfolio standards and net zero pledges have picked up a bit in recent years, this transition so far has been driven mostly by utility clean energy goals, favorable economics, and really great wind power potential across the Midwest and Great Plains regions. MISO South, on the other hand, is dominated by Entergy and leans quite heavily upon its extensive thermal capacity. And overall, this contrast between MISO South and the rest of the footprint has created an interesting dynamic that almost feels like the grid is split between two markets, where MISO South sees a disproportionate share of thermal resources, while the rest of the footprint sees an expansion of renewable resources and a dwindling supply of those same dispatchable thermal generation units. This phenomenon came into light during the most recent planning resource auction, which saw the entirety of MISO North, Central, and East all hit the capacity market price cap for the 2022-2023 planning year. And while there are a few factors in play here, the main driver behind the capacity market spike is the fact that 1 megawatt of wind or solar is really not equal to 1 megawatt of coal or gas generation in the eyes of the balancing authority. And therefore, as coal capacity continues to retire from the fleet, the influx of variable renewables is not properly supplying replacement capacity to the market. To avoid similar volatility in the future, MISO is looking into a few potential enhancements to its auction process currently, including a FERC-approved transition to a seasonal rather than an annual auction, as well as reevaluations of the accredited capacity levels given to variable renewables. Overall, given the renewable resource potential of the MISO footprint, we see the region as a strong market for decarbonization, though realizing this potential is really not without its own set of challenges, as the ISO is currently faced with a rapidly expanding queue, rising interconnection costs, and firm capacity shortages. We expect that these trends, as well as the lucrative incentives provided by the Inflation Reduction Act, will drive significant investment across the MISO footprint. Battery storage in particular is likely to be a focus point for investors, as these assets help to extend the load carrying capacities of renewable assets like wind and solar. And over the long term, battery storage is likely to pair extremely well with the growth of solar capacity through MISO South, which we see approaching more than 35 gigawatts by 2030.